The Small Cap Power Expert Interview.
Welcome, Grant. Can you tell us about the Howard Group and your Opportunity Knox conference?
Okay, I was a journalist, television journalist for about 10 years, and then between the period of 81 and 88, I was a special media and crisis advisor to the Calgary City Police and the Winter Olympic Committee. But because of my communications background and an appealing junior market, which is where my interests always were, continue to be, I combined those two things to start the Howard Group in 1988. So we started as an investor relations firm, but very quickly evolved from there to provide a number of services to micro and nano cap companies that were emerging, growing, raised a lot of capital, began investing our own capital in the 90s, and then started our first limited partnership in 2003, another one in 2008, and we'll be starting another one in 2016. So what we're doing with our Opportunity Knox conference in Toronto is we're taking 6 of our clients, which is about half our client base, and we're going to put them in front of an audience which is almost entirely made up of institutional and senior members of the investment community, as well as some very sophisticated investors, because it's like any other consumer product. You have to know about something and the potential merits of that product before you think about investing in it. So this is exposure. It's presented as emerging businesses. Some are further along than others, but the Opportunity Knox conference is our opportunity to get in front of a very good audience.
For 2016, where do you think retail investors should look to get the best opportunities?
Well, I wouldn't go on sectors. I'd go on company specifics because the way the junior markets are changing, people have become much more skeptical based on all sorts of history, not just around junior companies. And you really need to look at the management groups. Are they throwing cash off? How much money are they going to have to raise? So whether it's a technology story or an industrial, and perhaps even in some cases on junior resource companies that are moving into production, you really should be looking at their financial viability and also what their timelines and goals and objectives are. So I'm not going to pick a sector. I think you've got to look at individual situations, assess those, and spend a lot of time on them, not just follow the herd, because I see a lot of mistakes made because people hear a story and then they start to follow the story versus looking at the business and the potential and how much capital will be required to meet some of those goals and objectives. And don't be afraid to call management and talk to management. So do your homework.
What is the one rule that you always follow when investing in a company?
Well, there are several rules. We spend a lot of time looking at capital structures, management background. How much capital will they require to meet their goals and objectives? How likely are they to meet their goals and objectives? Are their expectations too high? So we spend many, many hours looking at every company before we decide to invest. And we don't just go all in at the beginning. We tend to tier up our levels of investment on the basis of have they achieved timelines and objectives A, B, and C. And if they continue to do that, then we don't mind putting more money in at higher levels, because what it means is they're building a stronger business, they're reducing the risk on it. But where you have to get wary of what's going on is when it's we miss this, we miss this, we miss this, because you know what's going to happen in the end, and it's universal. It always, always goes bad.
As a portfolio manager, what is the greatest lesson that you've ever learned?
Well, not to get emotionally attached, and that's easier said than done, because with some management groups, you can get fairly close to them because of their nature. They're working hard, they're trying hard, but perhaps it's not going as well as was expected, or they're tied up with large partners that move very slowly. And as a result of that, then you get the market where it says, this is taking too long. I'm going to take my money and move to another business story that I think is going to progress faster than where I have my capital right now. So emotional attachment is a real danger. So don't be afraid to sell, because generally there is going to be another opportunity to buy back in once that business begins to get traction. So emotional attachment is a real danger.
Do you have any favorite companies that you can mention for our investors?
Well, I'm going to pick a couple of companies that are actually presenting at our conference, our Opportunity Knox conference. And the reason I'm picking these two is we've been investors for a number of years, and over the past week there's been a couple of significant announcements One is a company called Grand West Transportation that makes an urban bus based out of the Vancouver area. And just a few days ago, they announced that they had received a $16 million order from their U.S. distributor for 50 buses. That's a major breakthrough, the first big breakthrough in the United States, and they already have orders or on the road about 60 buses. So this will take them through the 100 number. We're waiting on a series of other things that may very well happen, but it's a good, strong, growing industrial company with very specific advantages. The other one that we've been invested in since 2009 is a company called CEMATRIX, which is cellular concrete, very lightweight, high insulation factors, good on weak and unstable soils. The reason I'm picking CEMATRIX is just about a week ago, they announced that they had achieved $15 million in contracts for 2015. They've already poured more product than they did in all of 2014, where they did $8.7 million in business. Lost just a few $1,000s in 2014. But for 2015, they're projecting $15 million in sales, up to $2.5 million in EBITDA. They only have a little more than 34 million shares issued. So they've got a market cap of about $7 million, and they're just performing very, very well. And for 2016, they're already talking about $18 to $20 million in revenues. So it's a product that's really catching on. 90% of their pipeline, which is over 100 million now, is on infrastructure projects, not energy projects. So again, I'm picking those two recent announcements, very positive, and perhaps you have to do your own work, could be undervalued.
Thank you so much for your time, Grant.
Thank you.
Keep up to date with all of your favorite small caps. Subscribe to our free newsletter and get daily investment ideas, breakout stocks, momentum gainers, expert and analyst stock picks, and more. Smallcappower.com, investing ideas and research.